All right, everybody, welcome back to the course again. So, we'll start the new topic with a small disclaimer today that whatever we'll teach in this class is going to be only for educational purposes. Nothing in this class should be considered as an investment advice. All right, so let's proceed. So, yesterday, what we did in our class was why at least we should start investing, right? We many of us we keep our money just in the saving account, right? But yesterday we got to know a fact about inflation. Yesterday we got to know a fact about compounding, right? So today we are going to learn about mutual funds. Why we should invest specifically in mutual funds. You might have heard this advertisement as well that mutual fund sahi hai. So why it is so? Why mutual fund is good? Why we should invest in mutual funds and why mutual funds are so good and why they are so popular amongst the public, right? So let's begin. So you might see this thing, why mutual fund? Why specifically mutual fund now? All right. See, this is a very beautiful picture. See this girl, a smiling girl, beautiful girl. Now, what is happening over here that this girl could be from, or maybe this is you basically. It could be male, or you could be a male, you could be a female, right? So this girl, she's a happy to go lucky girl. She loves to go party, she loves to go out with friends, she loves to spend time in traveling, exploring the world, right? In a young age, everybody does this thing. And along with that, she is doing her job, 9 to 5 job, or could be in college, right? She could be from arts background, could be from science background, specifically not from the finance background. Or even if I say she's from finance background, but she is so much occupied. So if I ask her that, you should start investing, she would say, sir, I have no knowledge of stocks, I have no knowledge of bonds. How and where should I invest? Or if I start investing, I will lose my money. Definitely. Because when you start investing, you should have the knowledge where you are investing. You should know how to do the research, right? So this happy to go lucky girl, right? So she will face a lot of trouble initially to start investing. Here comes this guy, a guy sitting in a coat, in a blazer, looking smart. So he comes in this role of a fund manager. So what he is saying to this girl, you give your money to me, I will invest your money on your behalf. Just imagine. This girl, she doesn't have to do anything now. No knowledge required, no time required, right? So it means you just have to give your money to this guy, and this guy is not a ordinary. This person is not ordinary or not an ordinary person. He is a fund manager, a well experienced, well educated, you know, very competent, and this guy have a lot of experience in investing itself. So he will take the money from her, right? And he will invest the money on her behalf. It could be stocks, it could be bonds, it could be some alternative investment. So there are multiple forms of investment. So that decision will be taken by him. Now, this girl is having free time. This girl doesn't need to learn anything yet, right? She's getting more time for herself, and along with that, her money is also growing into wealth, which doesn't happens in the savings account. So this guy, he is doing the investments on her behalf. So when he is working with a team, this is called as mutual fund in very simple terms. I hope you got the point why we should invest in mutual funds, because directly if we start investing in stock market, definitely it can bring some losses to us. It is very risky. Many people, they start directly investing in derivatives, they lose, it is very high risk investments, trading, and they lose a lot of money. But this guy will make sure that she doesn't loses her money, and her money is getting, she's getting good returns on that, right? But this guy is not doing charity. So what's going to happen over here? he is going to charge some amount of fee, some amount of expenses that he will be requiring. And why he will be requiring those expenses? See, he is working somewhere in an office. He may have electricity, AC working, so electricity bills are coming. He may have some employees working under him, so he have to pay them, right? And he is doing for profits, so nothing in this world is a charity, right? There are no free lunches. So he will charge some commission out of that. That commission is his earning. I would say that commission is his, the competence which he is using. So this is how the entire mutual fund works. For his competence, he is charging some money, and deducting some money from her profits, giving the profits back. Means if she would have invested directly in stocks, she would have made 20% return. But over here, this guy will take some commission and return the money back, the profits. Now she may earn 18%, something like that. So he took the middle share out of that. This is how the mutual funds work. So what is the benefit over here to her? The benefit is that the time is not, the intensive time is not required. Intensive knowledge is not required. You don't need to do more research now. She's having more free time, and along with that, her money is also utilized. I hope you got the point. Now, why we should invest in mutual funds? Again, compounding comes, right? If you stay in mutual funds for the long duration of time, the money will grow, it will compound. So you will create wealth, right? And you will get, if the interest rates are good, high, and more than inflation that we already discussed in the previous class, definitely you are going to make a lot of return. Now let's come with a practical screen for this. Now guys, this is a SIP calculator, right? So if I start a small SIP of 2500 today, right, at the rate of 15%, I would say, and if I keep investing that for next 30 years, you will make 1 crore 40 lakh rupee just by investing 2500 per month in any mutual fund, right? Now if I keep this 2500 in bank saving account, so if I put this 2%, the same 2500, just keeping in that bank account will make you, around, will get you around 12 lakh rupee. So the amount that invested for next 30 years, if I accumulate 2500 per month, would be 9 lakh. And if I keep this 9 lakh in just a saving account, you will just get 3 lakh rupee interest, and that is 12 lakh rupee you will make in next 30 years. And guys, because of inflation as well, the purchasing power of this 12 lakh would be too less. So if I invest in mutual fund, will get, if you get more than 15%, that's absolutely good, right? But over here, let's take an example of 15%. Guys, from this 9 lakh, you can convert this into 1 crore 40 lakh. Means you are getting estimated returns of 1 crore 31 lakh rupee. It is huge. And if you start as early as possible, it will be good for you. If you increase this SIP to 5000 rupee per month, right, the same amount would be 2 crore 81 lakh. I hope you're getting the point. And if you keep increasing this time duration, time horizon, right? So time horizon, if it keeps increasing, compounding will grow every year. Then every year you will start making 1 crore rupee. At 30th year it was 2 crore 81 lakh. In 31st year it will be 3 crores 24 lakh. 32nd year it would be 3 crore 73 lakh. So every year 1 crore is getting increased. So what I want to say, more time compounding gives you good returns. And if you are lucky enough and if you get around 18% return, you can see the numbers. This is what I wanted to say. Now see the lump sum, right? Now lump sum is something when you put the money and you keep that money for a long period of time. So we are going to discuss what is lump sum, what is SIP, what is STP, what is SWP in the coming classes. But this is just for an example. If you keep 10 lakh rupee, right? If you keep 10 lakh rupee in just bank saving account, right? Or maybe in an FD, 6% interest rate for next 20 years. So you will make 32 lakhs, right? Including the interest. Including the returns, you will make 22 lakhs, the other returns which you are getting, and the total value which you will make is 32 lakhs. But the same amount if invested in a mutual fund, you will make 1 crore 63 lakhs. Huge difference, huge, humongous difference, guys. This is what I want to say. Investing in mutual fund is good if you want to grow your money into wealth, because first, no time required, no knowledge required. Some another person is doing the investments on your behalf, so it's a good thing, right? Now, diversification is a very important thing that comes into mutual funds, right? It means you have only 100 rupee today or 500 rupee. You're starting your SIP with just 100 rupee or 500 rupee, right? You can't buy costly shares like Reliance. You can't buy costly shares like Bajaj Finance. All these shares, they cost 2000 rupee, 5000 rupee, like that. So from this 100 rupee, you can't invest in big stocks, guys. And if you are a student, you would think, sir, how would I start investing if I don't have the money? So you have the opportunity now. That is why mutual fund. This is why you can invest in mutual fund. Let me show you over here. So this is HDFC Flexi Cap Fund Growth Plan. Will teach you everything, what all these terms means, what everything means, right? But today I would like to tell you, over here minimum investment is just 100 rupee. Now there should not be any excuse for you, sir, I don't know where to invest. I don't have the money to invest. If anyone can have 100 rupee, in a month, they can arrange. Today we eat pizza of 800 rupee, 500 rupee, right? So minimum investment over here is 100 rupee. And see where this company is investing, where this mutual fund is investing: ICICI Bank, HDFC Bank, Axis, right? SBI Life Insurance. See the portfolio of the company. I'll going to teach you what is STREPS and everything. But you can't buy all these shares at 100 rupee. But when you are investing in mutual fund, you own all of them. Means all the profits which this mutual fund will make by investing the money in all these shares will be shared with you in the proportionate level. Means according to the 100 rupee, right? Let's see the next mutual fund. Again, this is ICICI Prudential Large Cap Fund. We are going to discuss what is large cap, what is blue chip, what is growth, everything we are going to discuss. But today, see, the minimum investment
It's 8 o'clock.
is 100 rupee, guys. You can start just from the 100 rupee. And let's see where this company is investing, where this mutual fund is investing. See, mutual fund is HDFC Bank, ICICI Bank, Reliance Industries, L&T, Bharti Airtel. See the companies, guys. Can you tell me, can you buy a share of these companies with just 100 rupee? No, no. But over here, you can start investing just from the 100 rupee. Now there is no excuse, right? So see, you are investing in all these sectors. So these are the companies which belongs from all this sector. We will be discussing all these things. See the proportionate level, how they are investing in which company, right? So the thing is that over here, guys, when you invest in mutual funds, you can start from as small as 100 rupee and you can go, that's your limit. See, there are few mutual funds who will charge 1000 rupee in a month. This is 1000 rupee SIP, right? Minimum investment is 5000. Minimum investment is 5000. Minimum top up after that is 1000. We are going to discuss what these terms mean. But you can start from 100 rupee. You can some mutual fund will charge you 500 rupee minimum, some will charge you 1000 rupee. It's like that. But now there should not be any excuse that I don't have the money, I don't have the knowledge to invest. If you don't have the knowledge, start from a mutual fund. If you don't have the money right now, start from mutual fund. I hope you got the point. In mutual fund, you are getting diversified investments in banking sector, pharma sector. Some shares would be from banking, some from pharma, some from infrastructure. See, so many diversity. You are buying Bajaj Finance along with Reliance, you're buying L&T Pharma, all these companies with just 100 rupee, right? So this is how mutual funds are better. Now, one more thing that many people give the excuse That's it. If I invest in mutual fund, my money will get trapped. You know, if I need that money in emergency, what would I do? So let me tell you a few things, guys. There are few types of mutual funds, right? So it you will be amazed to know there are few mutual funds. So who can give your money back in the same day? Now let me give you a scenario. So there's Mr. A. This is Mr. A. He had invested 1 lakh rupee in a mutual fund, but all of a sudden he had some emergency and he needs his 1 lakh rupee back. Now what would happen over here? If he would had invested in overnight fund, he can get the money in the same day. Means if today he do the redemption, right, that I want to withdraw the money, same day after few hours he will get, by the end of the day he will get his money back. It's good. T plus 0 means the trade day, the same day the trade took place, means there is no extra day, that is why 0. This is a trade cycle, right? So today he said he redeemed his money and the same day he will get his money back. So don't you think even if you need some money in urgency, you will get the money back in the same day, right? Now coming to the next thing, they are liquid funds, right? Where you will get your money back by the next day. So today if I clicked redeem means I want the money back. So by tomorrow, it should be in the working day. No, so by tomorrow I will get my money back, not today. So if I redeemed my mutual fund today, so I will get my money back tomorrow. So again, not this could be a bit slow, but again in one day, today and tomorrow you'll get your money back. Now similarly, there are few mutual funds who will take one more day, T plus 2. So today if you make the trade, so tomorrow and day after tomorrow you'll get the money back. So guys, before you invest your money in mutual fund, you can see this thing as well, right? Now before this, I would like to give you one more thing over here. See, we need to plan things, right? Now what I can advise to you, keep some money in the saving account, very nominal money in the saving account, means which you think that if you're going to buy day-to-day groceries, then you can't keep redeeming your mutual fund, right? So day-to-day groceries, day-to-day expenses, like that, only that money should be kept in the savings account, right? And rest of the money you can keep in this account, or maybe in this account. Maybe you have some emergency but you need your money back by tomorrow, day after tomorrow, then you can keep your money over here. So in these funds, guys, you will get around 6 to 8% returns, 6 to 8% return. But in saving accounts, you are getting 2%. See the difference? So this is how you have to plan ahead. Now, sir, what would happen if some more emergency comes? Immediate money is required. So for that, you can do a few more things. Have an insurance. So if you have insurance, you don't need to redeem this. So buy a health insurance, buy a term insurance as well. So this is not insurance class, but if you have health insurance, so the medical emergency won't come. So again, your money is still intact in the mutual fund. You don't need to redeem it, right? And even if you need some extra money, keep 20, 30, 40,000 extra in your bank account if it is so, right? If you are worried enough that something may happen, so keep that much money, extra money in hand, and you can invest rest of the money in these. You can divide the mutual funds accordingly. I mean, some of the money in overnight funds where you will get the money back by today evening. So if you wonder that, okay, if you plan the things accordingly, that okay, I may need money by today evening. So instead of keeping in saving account, you can plan, okay, I'll keep the money in overnight fund at the rate of 8%. So if emergency comes and I need money by today evening, I will redeem it today, any time of the day, and I will get the money back in the same day, right? So the thing is that you have to plan the mutual funds according to the redemption settlement as well. Means how much time it may take for the settlement. I hope you got the point. So this is how much time it will take. Sometimes the same day, sometimes the next day, sometimes one more extra day, means tomorrow and day after tomorrow. So liquidity is good. We don't have to worry about the liquidity, right? Now, investment goals can be long term and short term, that we are going to discuss, right? Now guys, I hope you got the point that liquidity in mutual funds is good. It's just a myth. One more reason why we should invest in mutual funds is, guys, India is a growing nation. India is a developing nation, and India is writing its growth story, right? We are the most populous country in the world. More than 150 crore people live in India. And do you know how many people invest in mutual funds? Out of this 1 crore, it's just 19 crore. So it means we have just started. Just imagine more and more money starts inflowing in the mutual funds. More and more people starts learning financial literacy. Today you are doing courses, just imagine so many people start doing this course. So by doing this, more money will inflow in the mutual funds, more returns you will get, because wherever money flows, that thing always goes up. So if more money goes in mutual fund, eventually that money will go in stock markets. So stock markets will go up, right? So, and guys, we are, if we choose good mutual fund, we will be investing in top companies of India, best companies. If you invest in Nifty 50 mutual fund, index mutual fund, you are investing in top 50 companies of the country. That, that makes the GDP of the country, GDP of India. How come those companies can fail? You're getting my point. Now let me show you one more thing, guys. So this is the Sensex, BSC Sensex. See when it started, and see it today, guys. I hope you can see the screen. See, it's growing. Yeah, there were dips in between. It was because of COVID. It was 2008 crisis, and again, but the dot-com bubble is, there were instances. But eventually, if you see in the long-term picture, guys, it is evolving. See, it was just, there are few dips that do comes after 10 years. It's a cycle basically. But guys, after this dip also, it went up. See, see, see. So what I want to say over here is that, see the Nifty. So it started like this. Yeah, there are dips of, American crisis, dips because of COVID crisis and dot-com bubble. There were few instances. Some election results also affected. But eventually, you can see in the whole, in the longer time span, it is growing. So if Nifty is growing, if Sensex is growing, it means India is growing. So what I want to say, we are not investing in a mutual fund. We are investing in the growth story of India. And everybody is optimistic because we are a growing nation. And growing nations, we need good growth for our people, for our sustenance. So I hope you got the point. One more reason to invest in mutual fund is we are investing in the growth story of the country. I hope you got the point, guys. So if I compare mutual funds with how much returns you will get somewhere else, so let's see how much mutual funds can give you, why you should invest in mutual fund, right? If you keep your money in bank saving account, it will just give you 2% return. People say, sir, bank in the bank money is safe. The recent example, if you explore, it's again a case study and it's a homework for you. See, Yes Bank. The depositors' money got stuck. Even till today, they have not received the money back. What I want to say, there was a bank named Yes Bank. For example, your parents or someone's parents had, deposited the money in this saving account of Yes Bank. But Yes Bank collapsed. Just imagine the lifetime savings of that family got stuck with this Yes Bank. Now, guys, if mutual funds are risky, banks are also risky. Anything can happen, right? So 25 lakh rupee that person have kept in the saving account, or maybe in the FD, or maybe in any bank's instrument, it's stuck. People didn't get their money back. So uh, means what more should I say now? Senior citizen saving account, you'll get 8%, but for that you need to have, say, more than 60 years of age, right? FD and RD, you will get 6 to 7% return. It keeps changing, sometimes 5.7, sometimes 6, sometimes 6.7, sometimes 7.12, like that. PPF you'll get around 7%, 7.1, 7.2. NPS, it is around 10%. Sukanya Samriddhi Yojana 8%, right? These are safe. PPF is safe, NPS is safe, Sukanya Samriddhi Yojana is safe, central bank. But you have to choose a good bank as well. Means you should have money at least in two or three different bank account. Again, this is my advice. So don't keep the entire savings in just one account, one saving account. If your one account is with Yes Bank, you should have some account in SBI, one in PNB as well. Why I'm saying this? If one bank collapses, at least you have money in some different account. At least that would be safe. So getting a point. So again, it is just you should diversify your money in these savings accounts as well. Now, let's compare these conventional things with mutual funds. In mutual fund, guys, you will easily get 6% to 10 to 18 up to 22%, depending on different mutual funds. But the range starts from here, right? Now, if the returns are less, risk is also less. If returns are more, bit risk is also more. But the thing is that this is a range. All whatever we have discussed, that is also valid up to into in all these things over here. But I want to say, whatever we have discussed, like compounding, diversification, less risk, better fund managers. If fund manager is good, even this high risk will not be too high that your money will become zero, right? So what I want to say over here, in large cap funds, we are going to discuss all these things one by one, topic by topic, word by word. But just for right now, what returns you can expect? See, in the large cap, these are the big companies, mutual funds who invest in big companies. You can easily touch 14-15%, guys. Mid cap and small cap can easily touch 14, and it can cross 20% as well, means 22, 24, sometimes 25%. But on an average, you can easily touch 15% here, right? Risk as compared to equity is very, very less. Then comes the debt funds, 5%, 7%, 8% return. Why debt funds? Because less risk. These are the same funds where you can withdraw the money overnight. These are the debt funds, guys. Means if you want your money just like that overnight, means today you want to redeem your money today only and you want your money back, so this is the return you can expect. But still, this return is higher than this all of them, guys, or just equal to senior citizen and all these things. You are getting the point. So it means mutual funds can also give the same amount. Or what you people can do, invest your money in this debt fund, and whenever you require, you just redeem it like that. Hybrid mutual fund, again, up to 12%. There are ETFs, they can also touch 15%, 12%. So there's a few sectoral funds, we are going to discuss that as well, but they can also touch 18 and 20%, 15%. So on an average, 15% is generally which we take, 12%, 15%, sometimes 18, sometimes 22, sometimes 8%. But on an average, we if we are very conservative, we are very strict with our approach, we'll take 12% estimated return. If we are a bit liberal, we can take 15% return. More than that is always welcome. I hope you got the point. So these are the few reasons why we should at least start investing in mutual fund, guys. I hope you got the point, everybody. So again, a break time, and we'll continue the session with a new topic.